Hello, my name is Steve Bigelow with the Candlestick Forum. We've got a lot of good short trades in these market conditions. And these market conditions are pretty well illustrated by the fact that when they came down or brought the Dow back down to the bottom of this channel, look at your morning star signal that bounced it right back up to the 50 and did an evening star signal. What did that tell us? They weren't going up. They were now doing the next pattern to the downside, which in this case you can see is a bearish J-hook pattern. And if this was wave one, it was pretty much assumed that wave three would not hold here at the bottom of that channel or the 200-day moving average. Now, this obviously is being caused by the fact that there's the Silicon Valley Bank closure, and not putting a lot of confidence in investor sentiment, obviously. So you pretty much want to stay short. The NASDAQ, same scenario. You came right back up to the resistance level, did a shooting star, evening star signal, followed by a bearish doji sandwich. And then on Friday, you can see they failed to hold at the 50-day moving average, making the prospect of wave one, wave two, wave three highly likely. So you definitely want to stay short. The only bullish sector would be the gold stocks, where you started seeing gold pick up some strength. If you're going to buy anything long, pick one of the gold stocks that are doing good positive trades. However, these are the high probability trade setups. You can see the bearish J-hook pattern on net, which also with a gap down failed to hold at the 50 or the 200, making this area your next target. Wayfair, same scenario. You can see the dumpling top, failure right at the T-line. Wave one, wave two. On any weakness, you could be shorting this one, expecting wave three. Carvana, still having a hard time getting out of its own way, even though they popped it up a while back. You can also see the dumpling top failure at the 50. Good percentage move potential if they take it back down into the $4 area. And coin, you can see the rounding top, the failure to hold the 50, another one that can be shorted on weakness. So as long as we've had the market heading down, our recommendations are still working on the downside. And if you have indicators like Morgan Stanley, Goldman Sachs, you can see the dumpling top, big rounding top on Morgan Stanley, followed by an evening star signal, followed by your bearish doji sandwich or your Dagwood, your evening sandwich, indicating there's probably a lot more downside, at least coming down to test this area. So even if you're not trading Morgan Stanley or Goldman, if they're trading off, the market is going to be trading off. They're one of the kind of the indicators of the market trend. So this dumpling top works very effectively because it's the opposite of the fry pan bottom. When they start forcing it down with great enthusiasm, that's telling you that downtrend is going to give you a high profit trade situation. So once again, we always put out our free 2-week trial. Come try us. It's not that there's any secrets. It's just learning how to use candlestick analysis successfully. And next Saturday, we're going to be doing a full day multi-speaker training. There's going to be 5 or 6 professional traders. Come join us on that. It's free, and it gives you a lot of perspective of putting different trading strategies side by side to see which ones might fit most effectively for your type of trading. So with that, stay short. We'll see you in the chat rooms.